Once again, I would like to welcome everyone to our fifth lesson in our Market Profile Beyond the Basics course. And as usual, we will quickly review the disclaimer together. Trading and investing involve high levels of risk. Future results can be dramatically different from the opinions expressed in this course. Past performance does not guarantee future performance. The presenter may or may not hold positions in the financial instruments discussed. Alright, our lesson 5 is titled The Footprint Bar Statistics. Now, we've talked a fair amount so far about the footprint, and in today's lesson we are going to introduce some interesting statistics about the footprint itself, and we will see how those can help us to learn about market activity and potential market direction. Now, as usual, since this is our first day of the first lesson of the week, I like to review the exercise, the applications that we looked at together. I find that this is often one of the most effective ways to learn, and that is to actually apply the concepts that we are looking at in the real live market. So let's take a look at some of these questions and see how we can answer them. How many level 1, level 2 markers are there? Well, it should be an easy answer. There are 1, 2, 3, 1, 2, 5 level 1, and we have 3 level 2s. Is there any overlap in prices where the markers appear? What is the significance of that? Yes, we do see some overlap in this period. Certainly at this price level, there are two different level markers. There's a level 1 and a level 2 here, and again we see overlap here. Yes, this is significant, and it is telling me that there is heavy participation in the market at these price levels during more than one period. So the heavy participants, or the larger participants, are in fact continuing to participate in the market at these price levels. It makes those price levels even more significant. Now, where would you expect prices to go from here? And that's always the challenging question and the interesting one to address. If we take a look here at what is going on, first of all, we have a spinning top, or a non-conclusive period, where the body is right in the middle and we have a lot of heavy activity. Then the following period we continue to get heavy activity, but this time the candle ends up closing negatively, or it is closes on a bearish note, and creates a lower close than the candle that preceded it. Well, let's look at things logically now. If this was in fact strong buying activity, we would have expected prices to continue to move higher, which they didn't. So obviously we are now seeing the impact of this intense activity, and it is to the negative side. And even with this increased activity again in the next period, we end up with a negative close. Then the likelihood that prices are going to continue lower is much higher. Now let's add a few more things, a few more observations to help us determine price direction. Take a look at where the 50 simple moving average is up here and where the 20 is. The 20 is below the 50. So that already tells me that there is a dynamic in the market of negative pressure. So if I were to surmise and expect prices to go lower, that would be a reasonable expectation based on the KVT activity that we see here, and also based on the overall parameters that appear on the chart. Always look at the big picture and make your decision on as much tidbits of information as you have available. And sure enough, take a look at what happened next. Prices did significantly drop in the next period, and here we end up with another level 1 KVT right at about the close of this new period. Now, where would we expect prices to continue? Once again, I'm going to highlight the momentum and the trend in the market, the 20 below the 50, and this selling activity. I really don't see a lot of increased new activity that's pushing higher, so my expectation would be for prices to continue lower. Let's see what happens. Well, we stall. We don't really go lower, and we end up stalling. And then I begin to see additional activity. Well, but look at the outcome of this activity. It never managed to close above the 20 simple moving average, and I have a wick pushing to the downside. So again, my expectation would be in line with the general momentum in the market. I would expect prices to continue to move lower. Now let's take a look together and see what actually happens. Sure enough, it continues to drop. And now, what would I expect now? Would I, if I was short in this trade, would I continue in this trade, or would I begin thinking about exiting? Well, here's the continuity of the smart money, if you will. Here pushed us down, here pushed us down. Now, I don't see any new KVT on my chart, and so I would certainly be inclined to continue with the move lower, and let's see what happens next. Sure enough, now I begin to see some level 2 activity here and in the market. So if nothing else, it should give me pause. Are we still going to move lower? Well, possibly. It is not as confirmed as it was up here in the earlier periods, but the market continues to facilitate trade to the downside, and the momentum is to the downside. So again, I would be in favor of continuing with the short. Nothing has happened yet that is alarming to me. If in fact I take out the low of this prior period, I would want to continue in the trade with a short. If in fact I don't take out the low of this period, I may hesitate and I may exit if I'm holding on to a position. Certainly I would not initiate any new positions to the short side. So let's take a look and see what continues to happen. Now notice we did not drop any lower. A word of caution: be careful, because sometimes the market will drop one, possibly even 2 ticks below and then continue back higher. So simply dropping 1 tick does not constitute a continuation of a trend. You really have to be judicious and careful, and certainly this would not be a good point to enter a trade after it's been moving down now for several periods. So I would have to wait and see what really is going to happen and develop in the market. And if you notice, we haven't been able to take out the open of the prior period, and I ended up with a spinning top. So obviously there's still selling pressure in the market, and the momentum is still to the downside. We don't see anything that negates that, and let's continue on and see what happens. All right, we end up actually moving higher. So if in fact I was still in a short, the minute that we begin taking out the high of this new shorter period, I would get out of that trade immediately. If I had continued to move lower, then perhaps I would be comfortable about the short. But in this case, if I had made the wrong decision, I exit, and I should exit as quickly as possible. So prices headed up higher. Does this mean that there's a change in the trend and all of a sudden we will skyrocket? Absolutely not. It just means that there's some buying pressure that has come into the market, and this is potentially a retracement, and we may see prices continue to fall lower. But at this point, it really isn't clear what's going to happen. If anything, at minimum, I'm probably going to jump up for a retest of this key level that pushed us down earlier on the chart. But let's begin answering a couple of other questions that we had on our practical exercise. And one of those questions was, what is the difference between a level 1 and a level 2 KVT price level? Well, the level 1 is less intensity, level 2 more intensity. And it's important to understand the distinction between the two. Greater participation, a more significant level for level 2 than level 1. So all of those dark green markers are more significant and indicate heavier market participation than the lighter light green. What does it mean when several KVT markers appear within the same bar? So if we start to see a lot of them in the same bar as we did here and as we did here, well, it means that this is a key price level that is experiencing heavy participation, and we are likely to experience a strong move at the conclusion of that period. So when you begin to see lots of KVT markers in a single period, that really is significant. Keep your eyes open. There's a potential move on the horizon. Where would we expect prices to go from the close of the last candle on this chart? So we closed up here, and now the question is, where would we in fact expect prices to go? Well, we addressed the question a little bit earlier, but let's take a look at it together again. Potentially, we are coming up for a retest of this level up here. And based on what happens here, this participant certainly pushed the market lower. So I would expect that if we came up to here, we are probably going to see prices continue to drop again. If we don't even make it that high, then the negative pressure is even higher than what I anticipated, and we are likely to see prices continue to move lower. So let's see now what actually happens. And remember, I'm also taking into account the 20 below the 50, and that is significant because it tells us that the overall momentum in the market really is in favor of the downside. All right, so let's take a look at what happens. Well, sure enough, we come close right here. We test, and as I had anticipated, the negative pressure is still strong in this area. The seller, who is participating back here, continues to supply the market, and sure enough, what happens is when we come back for a retest of that level, we see prices drop significantly back down. And the interesting thing is we also take out the area here where we had some participation that pushed prices higher, signaling that this was a weak buyer that really didn't have the wherewithal to turn the market, or this could have been perhaps a buyer that was starting to build their position and was buying a little bit here and will continue to buy as the market continues to drop. All right, in the chart above is the momentum to the upside. And why? Well, I really want to impart to you the skill of being able to detect price direction fairly quickly and easily from some simple parameters on the chart. And in this case, we have the simple 5 and we have the simple 20 moving average on a 30-minute chart. And if you take a look, the 5 simple moving average is pointing down and is in fact below the 20 simple moving average with a rather significant gap between them. Momentum is definitely not to the upside. Momentum is to the downside. So that answers the question of where does momentum appear to be. What does the presence of many blue dots in the past 4 candles tell us about order flow and market activity? Well, we know from our prior session that these blue dots are the result of a filter, a volume filter. And basically, at each of those levels, there is 8,000 contracts plus traded, so 8,000 or more. And in addition to having the KVT on the chart, as we mentioned previously, it is helpful to add the volume filters because they give us an idea about the spread of a certain amount of volume throughout the bar. The logic of the filter is different from the KVT, and so it shows us a different picture. But the two together give us a nice idea about what is going on. So certainly all these blue dots, in addition to a red dot, which is in excess of 15,000, plus one level 1 KVT, this is an area of heavy participation. There is a battle, if you will, going on here in this particular area. The blue dots signify that there is intense activity in this area and there is a move about to occur. And the question now is, the move going to occur to the downside, or is it going to occur to the upside? Again, typically, or the higher probability moves are usually in the direction of the trend, and we identified the trend to the downside. In addition to that, if you learn a little bit, or if you know a little bit about candlestick patterns, you would recognize what is often referred to here as a bull sandwich. There is one bullish candle between two bearish candles, and so the bears have trapped the bulls in this sandwich, and the expectation would be, and the order flow is likely to continue to take prices lower. Now let's see if this analysis is accurate. Where would you expect prices to go from the close of the last candle on the chart, and why? Well, we would expect them to move lower, and for pretty much all the reasons that we have just discussed. And sure enough, take a look at what happens. Prices do continue lower. And we do start to see some KVT level 1 and level 2, but they don't amount to much in terms of a push higher, and we're continuing. So sometimes you'll have some buying activity in anticipation of the reversal of a trend, and eventually they build a position that way. So it's not unheard of that some participants may be buying at certain lows and building positions for the upside. But certainly none of that activity was sufficient to push the market in the opposite direction. All right, we have another 30-minute chart here. And in this case, we are really looking at the first period, or the early part of a day's trading session. What is the direction of the trend on this chart, and how was that determined? Well, with as little information as we have on the chart, we can still answer that question. And the answer is, take a look. The simple 50, the simple 20 are parallel to one another. I don't have anything pointing down. I don't have anything pointing up. If anything, my simple moving average is pointing lower. So the direction of the trend is really, there is no coherent or clear trend. We could make the argument there is a very weak uptrend simply by virtue of the fact that the 20 is above the 50 and the simple 5 is above the 20. So if anything, there is a potential minimal bias to the upside. And this is how we determine that. We look at the available data on the chart. Now, was there any way we could discern anything from the filter or from these KVTs? Well, certainly they will not tell us anything about trend, because look, if this was buying activity and it pushed prices higher, obviously the volume that came in here pushed prices lower. This also pushed lower. We ended up closing here. So if anything, the only other thing I know is I've got a level of support down here and a level of resistance up here. That's pretty much it, what I can discern from the information that I have on the chart. All right, the last 4 candlesticks represent the first 2 hours of a trading day. What information do these candlesticks provide us about potential price direction? And the answer, again, is really very easy. They really don't provide us much information at all. If anything, they tell us the market is in a rotational state. We might end up seeing prices fluctuate up and down because of this level of support and this level of resistance until we begin to see some heavy participation or a major change in the market. So really, at this juncture, they don't tell us very much at all. The positive candle that closed prior to the last candlestick had a strong volume imbalance to the upside, yet the following candle took prices lower. How would you explain that? Yes, take a look at this. The volume imbalance to the upside was just very dramatic and very strong, and it pushed prices higher. And if you would see that without seeing this next period, you would think, wow, after such a strong imbalance, I would have expected prices to continue heading higher significantly. And they didn't. This is one of the pitfalls of sort of jumping to conclusions a little bit too quickly. We did have an imbalance to the upside in that period, but that could have very easily been an aggressive buyer and an aggressive seller that was supplying the buyer at the ask. Here, you want to buy? Take all you want. And then this buyer was exhausted very, very quickly. And the exhaustion is quickly apparent. The buyer did not have the wherewithal to continue with the move higher, and therefore we end up with a negative candle following this huge initial imbalance that we saw. This often happens in the volatility of the open in the early day. People get excited. They see some action to the upside. Everybody jumps in on the bandwagon. That's typical of amateurs, only to see things take a turn in the exact opposite direction. Where do you think prices will go from here? Well, I would anticipate that since we have resistance up here, they are more than likely to come back for a retest of the 50 and the simple moving averages here. So I would expect them to move lower. And if in fact these do not hold, I would expect them to come back for a retest of the buyer that was here before, if they're still going to try to push prices back up or not. That would be the expectation. Well, sure enough, the market did as we expected. It came down here. These levels did not hold, and they came back for a retest of where the buyers were. The buyer again attempted to come in, but obviously the seller was stronger because we see the outcome of what happened. Prices continued to move lower below the heavy participation and all this 8,000 plus activity that we see. The KVT level 1 and level 2, that really didn't matter. Prices continued to drop lower. So now the question becomes, where do you think prices will go from here? And the answer now becomes a little bit easier, because take a look at what's happening in the big picture. My 20 is dropping below my 50. My 5 is also sloping downwards. And even with all this heavy activity, I was not able to take out the high. Certainly I haven't taken out the low, but if I begin to take out this low here, I would anticipate prices to continue lower. Sure enough, that's exactly what happened. My prices continued lower. We stalled a little bit in this area here, and this usually happens when you have intense volume. There's some battle going on between the buyers and the sellers. There's a handoff, and at some point it'll become apparent which of the two is the prevailing force, and usually that will become apparent on the basis of whether we break through a low or whether we break through a high. And certainly this high was never touched, but we kept on making lower lows, and we continue to drop in this particular market. Notice again, want to highlight the fact that prices like to come back and retest areas of high volume participation. Came up to this level right here where we had some intense activity, found that in fact this seller was still alive and was willing to supply at these levels, so it wasn't able to make much of a penetration higher, and it brought prices down right away. Keep an eye, always look to the left, and keep an eye on heavy participation. This key, that's why we track these key levels, because they do come back and serve as important reference points for us on the chart. All right. In this case now, we are looking at a very different footprint from the ones that we've been looking at in the past. And we are looking at a 1440 minute footprint. And because these tend to have a very, usually will have a rather wide range, we can only see one full footprint on the chart, and it's this one right here, and that actually happens to be for the for last week's close, which was Friday. That was the full 24-hour trading period for Friday. So 1440 gives you the full 24-hour day, if you will. Unlike the 1020, which we looked at before, which breaks up the day into two different sessions, the evening and the day session, the 1440 is a full day's chart. And as we begin to analyze the data for the full day, you will see the benefit of why the 1440 is also a useful chart, whether you're going to be doing some swing trading or whether you're going to do some intraday trading. As I will show you, you will be able to extract some valuable information from this 1440 period. And the first question that we want to look at here is, what is the extent of the imbalance at the value area high and the value area low of this 1440 period? Well, we have to go up here and take a look at the value area high, and it's this level right here. And if you notice, I do have a footprint in the background. I have a profile in the background below the footprint. So we have a footprint, we have a candlestick, and we also have a profile, all nicely sort of placed on the chart. So we have a 24-hour period. There's my high. There's my low. That's the extent of the range. Now notice, this level here is the value area low from the prior day. So I'm not really looking at that. There's my value area low for this day, for the current day, or for Friday. And that's my value area high for Friday. So let's take a look at our question and see if we can answer it. What is the extent of the imbalance at the value area high and the value area low? Well, let's take a look. The value area high here, the imbalance is to the negative side, and it is 13,400, and it looks like 73 and 9756. So there was negative pressure at the value area high, and the imbalance was to the downside. Now, what's happening at the value area low? Well, once again, something very similar. The imbalance is to the downside, 21,585, 19,930, both to the imbalance to the downside. So it should not come as a surprise to me that we ended up closing the 24-hour period below the value area low. I had a negative imbalance at the top at the value area high, and I continued to have a negative imbalance even at the value area low, and I end up with a close that also has a negative imbalance below my value area low. So that certainly was a very bearish day, and I have a number of different indicators or parameters that that show us that. All right, now let's take a look at another question on this 1440 minute chart. Where is the greatest imbalance on the footprint for Friday, and why is this significant? Well, the greatest area of imbalance is really up here. There's two of them, but this one is probably a little bit more significant. If we did the math, you will see that up here we had a number of times where we had an imbalance to the upside. There was obviously a buyer that was trying to push prices higher that was unable to do so. And as a result, prices continued to move lower. Now, this area above is not the only area that is that has a significant imbalance. It certainly has an imbalance to the upside, and it shows failure of a buyer, which means that we have a strong seller at this point that really was able to overtake the buyer, and so this is a critical and an important level that we have to keep an eye on in the future when prices come back here, and they probably will. We know that this is likely to be a level of resistance because this buyer here had a very difficult time overtaking the seller, and the seller was able to supply them and push things lower. Now, interestingly, here on the other hand, we also have a strong area of imbalance, if you will, but this time it is to the negative side. It's not as, if we do the totals, this is probably a little bit weaker here, but what's happening here is there is a buyer, again, that is trying to overtake the seller. So notice everything that the seller throws at them, they buy at the bid, at the bid, at the bid, but ultimately what happens is, again, this buyer is not as strong as one would have expected, and prices continue to drop lower. So in both cases here, both of these two levels did not prove to be levels of support. If anything, they are levels of resistance in the market, and I would be looking back again to the 1835 area. Keep an eye on that as we begin to attempt to move back up. We would like this the 1835 area to become a nice level of support for us before we continue to navigate higher. All right. Now, in addition to the footprint here and the profile in the background, we have just clicked one button that has given us additional data that you will find quite helpful. And these are the volume levels for each of the price levels in the range. As you can see, at each level it tells us exactly what the total traded volume was. So if you add the bid and the ask, it should give you this exact number here to the left. In this case for Thursday, or the preceding day or the prior day, and here at any of these levels. So for instance, if we wanted to know what the total volume was at our volume point of control right here, it was 68,430. If you add the total contracts traded at the bid plus the total traded at the ask, you are going to end up with the 68,000. And it is helpful for us to see these different levels to the side on the profile, especially when we put the filters on. It shows us the exact volume level if it's above the filter parameter, by how much, and so on. And we will also be looking in a later lesson at volume at price analysis, but this is sort of an early introduction to that concept, and getting a visual reading of these volume levels at price level in an easy and simple way that accompanies the profile. Now, in this case, we've added to the footprint volume filters. So we have the volume filters, and I also have the volume levels. And let me share with you what I was talking about earlier. So for instance, take this level right here. We know that the red marker, the red identification filter marker, identifies for me 30,000 plus. If I have 30,000 or more, here we'll highlight that. Okay, 30,000 or more in terms of volume, then give me a red indicator marker. If I have 40,000 or more, then give me a magenta. And I usually will ask for them to be printed side by side so I could see that. And I always like to have more than one filter because, again, when you gauge things, you want to have an idea about the extent of intensity. Just because it's 30,000, it's greater than 30,000. It could be 40, it could be 50, it could be 100. How do I know how much greater that is unless I have some other parameter that helps me to analyze that and identify that in the market? And I do that through the use of multiple filters. So here I am looking at 30, 40, and then what I do is for the ones that are in fact 40,000 or above, I look at the volume level out here and it tells me by how much. So you see this one here was only by 500, so it wasn't that much greater than 40. The one above it, on the other hand, was 2,000 more. Now here, when we get up here, take a look at this. This is 68,000, 59,000, 50,000, 44,000. So all of a sudden, I get a very different appreciation for the volume levels here. These are far more significant. So not all my magenta points are really equal. They signify for me the increase, but they don't tell me the intensity. And this is where these volume levels on the left-hand side often help me to gauge that, and that's why I like to show them on the chart. So this is sort of a practical application of the concepts. So certainly this is a far more significant level here than perhaps, say, this one would be. Far greater participation up here, and you notice it's also right at the volume point of control. And similarly, if we come down here, this level is not as potent as it is up here. This one is probably more akin to the level there. When we get down here, we only had 140, and volume is decreasing as we continue lower. So I begin to get a visual image that this area here, there's probably more interest, more activity, and is an area that is likely for the market to come back and visit again soon because of the intense activity that's taking place in it. Alright, now I changed my volume parameter. Instead of 40,000, I increase it to 50, and at the same time I've added another important feature to the chart, and the feature is really the title of our lesson, which you see it right here. It is the footprint bar statistics indicator. And that is another very useful indicator, and you will see some of its utility in this lesson, and we will be touching on that in other further lessons down the road. But notice now when I change the criteria or the volume parameter, notice how much less I get. If I make it greater than 50,000, then all my 40,000 in between levels vanish, and I only end up with really 3 key levels up here that are above 50,000. So for the whole day, I only got 3 50,000 levels. All right. I hope that you are beginning to gain a sense for the value of these tools that Market Delta has, and the purpose of these tools really is to help us hone in on data that is important and relevant. You will often find that there are a ton of data that are not necessarily always very helpful, and I don't look to use every single tidbit of data, but certainly you will find some to be far more important and far more critical than others. And usually things that are volume related, pay close attention to them. They will often carry significant information with them. Alright, the footprint bar statistics is really very simple, just like all other indicators. Pull it up as an indicator, and then you have a multitude of different things that you could select from this window And once you select them, you click on this arrow, it brings them here, and those are the ones that will ultimately show up on your chart. So it's a very easy, very simple tool to use. Setting it up and selecting the numbers to have on it is the easiest part of the challenge. What is really important is learning to use and learning to interpret and hone in on the data that is significant for you. Now, again, here I tried not to include all of the different parameters, but I wanted to include some things that I thought would be helpful for you to look at. Certainly, the total volume for the day is very important, and I'll come back to that in a moment. The delta for the day is important. That is the calculation of buy minus sell volume, or ask versus bid. We'll talk about that in a little detail also. The average volume at price is another important, significant number that I like to look at. Max delta percent, min delta percent, delta percent. These percentages also are useful. The max delta, the min delta, the delta, and the delta finish are all useful and nice numbers. Of course, the buy volume, the sell volume, the buy volume percent, the sell volume percent, and the volume change are also helpful. Now, it is important to sort of understand why some of those numbers are helpful, but let me tell you that quite often the best way to use some of these numbers will be in the development of RTL indicators, because it is very difficult visually to eyeball numbers and sort of get them right. You'll need to hone in on a phenomena or on a particular calculation that you're interested at, and then when it occurs, to use the RTL language. And I will try to give an example of that in a lesson down the road where that would be helpful to use. But let's, for our lesson today, let us focus on the usefulness of the number itself and how we can use it, and we'll leave the RTL issues for another lesson. Total volume. Total volume is a very important number, and it happened to be especially significant between these two 24-hour periods. For Friday, we had a little less than 1,600,000 contracts traded on Friday. But when we look at Thursday, we had about around 654,000 contracts. That is a significant difference. That is, immediately that would raise an eyebrow. Why did I have so much more participation on Friday than I did on Thursday? And that also gives me some clues and tells me some important things about the market. First of all, that at these levels, at this new range for Friday, the market attracted much greater participation. 2.44 times the participation that it had attracted the day before. And we find that calculation simply by dividing the total volume for Friday by the total volume for Thursday, and we find that it is 2.44 times that volume. So I had much greater activity, much greater participation. So obviously, for that to have happened, a lot more buyers came in to participate. And the way that now I can gauge whether I had buyers come in or whether this just was the market completely unloading would be to compare the ranges between Friday and Thursday. If we do that, if we take a look at the range comparison between the two, we will find that for Thursday we had 33 points, and for Friday's range, even half that range, 14.25 points. Well, what does that tell me? I had 2.44 times the participation in a smaller range. That means that I have a battle on my hands. it means that now activity is really intensifying in a smaller price range, and we are the downward move is not probably going to continue for much longer. I'm starting to see the buyers step into the market, and they're still selling pressure, but the buyers seem to be absorbing it. Imagine 2.44 times the activity and half the range. If this was all selling activity, 2.44 times, would I have not expected to see a tremendous expansion to the downside? Of course I would have, but I didn't. So even though the sellers continue to be the dominant force, I should, if I was in a long position, if I was in a short position, I would be very careful, and I would be looking to plan my exit. I would realize that the likelihood that the move will continue unimpeded is not very high. At minimum, we are going to probably fluctuate for a little bit in this new range that we have found, and we're going to do battle in this area. And it may very well be that the selling pressure will increase again and push us lower. But for the time being, and the message or the information that I am getting from the 24-hour activity is that buyers have stepped in, and the market did not expand the range much lower. So there is a vigorous battle on our hands. And we looked at the range comparison. Another indicator that helps us to identify that is the average volume at price. Now notice the difference and the extent of the difference between the two. The average volume at price for Friday was 27,582 versus 4,881. So that move on Thursday, that drop of 33 points or so, that range really came down at very low volume. Nobody seemed to be trying to halt the drop. Buyers didn't really step in. They let it drop. They didn't begin to step in until this new range where we are at now. Now, buyers typically will not make a single point stand. Usually they'll begin the battle in an area, and then they may allow prices to drop a little bit more and continue to fight again, and then they will start to bring prices up. So don't necessarily expect an immediate change in direction, but certainly watch as this move begins to lose some of its luster, move to the downside, and lose some of its momentum, and then consolidate for a period, and then based on what happens in that consolidation, the future direction will be determined. Another very important number that we've mentioned, and certainly as part of the footprint bar statistics, but we haven't explained yet, and now is as good a time as any to introduce it because it's a very important and powerful concept. As a matter of fact, it is one of the key words in the name of the platform that we use, which is Market Delta. So what is this delta, and why is it so significant? Well, delta is the term that's used to describe the net difference between buying and selling activity in the market. How do we know, or how can we tell, what is buying and what is selling activity in the market? If you think about it, determining whether activity is buying or selling activity is not an easy task at all. And the only way that the delta attempts to do that is by making a major assumption. And you should be aware that that is an assumption and not always a truth. And the assumption is that trades that occur at the ask price are trades made by aggressive buyers, and trades that occur at the bid price are considered to be made by aggressive sellers. However, that doesn't take into account that there are many times when aggressive buyers are buying at the bid. And there are also many times when aggressive sellers are selling at the ask. So you really have to be careful in looking at various delta parameters and delta statistics and keep that in the back of your mind. And there has to be significant delta variations for me to be willing to sort of hang my hat on the delta alone or on the delta as a key element of any decision-making process. But nevertheless, it's important to understand what the delta is and what the weaknesses of the delta are. So again, the assumption is a positive delta would reflect more aggressive buying as the result of motivated buyers lifting the ask. Now here we add another dimension and this idea of lifting the ask. So if I see a positive delta and I see that the ask is being lifted in the overflow, that's a whole different scenario. That may not always be happening. That may not necessarily be the case. But if I see that, then that assumption would hold true, that those in fact are buyers. But even when that's happening, how do I know that the buyers are more aggressive than the sellers? Well, somebody is supplying these buyers at the ask, and it could be a very eager, willing, and ready seller. So it doesn't negate or change the cautious that one has to adopt in working with the delta. But one has to be very realistic, but one has to understand the underlying assumption. A negative delta would then reflect more aggressive selling as a result of motivated sellers hitting the bid. Again, those are the basic assumptions associated with the delta, and here's the delta calculation, and this is how we would calculate our delta. The delta is really the difference between the ask traded volume and the bid traded volume. So let's say we have an ask of 1835.75 and a bid of 1835.50. We sell 50 contracts at 1835.75, which is the ask, and 35 at the bid. The difference between the bid and the ask, 50 minus 35, that would give me a positive delta of 15. In a nutshell, that is the basic calculation that we use to arrive at the delta number. And so the one leap of faith that I want you to be careful in always making is this idea that all volume that trades at the ask, all ask traded volume, is really buy volume. Okay? It is not always buy volume. It could very well be selling volume. Be careful with that. Now, from our bar statistics, we actually have numbers for the buy volume and numbers for the sell volume. And if you take the total buy volume, and again, that's simply all of the ask traded volume minus all of the bid traded volume, for Friday, we would end up with a negative 14,920 delta. And a negative delta tells me that there was negative pressure in the market, and this is typical of a red candle. Now, interestingly enough, I'm going to do another study on this same Friday candle that might surprise you. We looked at earlier the imbalance in the Friday candle. These are just the numbers, these are just the volume levels that had imbalances in them. So I tallied up all of the negative imbalances, here they are, and all of the positive imbalances. And interestingly enough, I had 53,000 upside or positive imbalances to 42,000 negative imbalance. Most people would have anticipated this number to be higher. But if you really think about it, if there's still a lot of selling going on at the ask, it would explain this. And this is why we ended up with a negative candle, even though we did have a significant imbalance to the upside. Numbers are interesting, but you have to be careful when you look at them, and you have to make sure you're always looking at right numbers and interpreting them accurately. All right. We talked about the delta, and we talked about the weakness of the concept or the assumptions behind the delta. Now let's talk about something that really is useful about the delta. In any period, be it a 30-minute, an hour, a 40-minute period, a 10-20 session, during that session, at the close of the session, we can always identify, and also while it's open, but it's most meaningful after the close of the session. We can identify a delta max and a delta min. What do we mean by that? Well, during the trading activity for that session, we reached a peak point. A maximum delta was reached, maximum positive delta, and a minimum negative delta was reached. The maximum delta was reached supposedly when the buyers were at their peak or at the strongest moment ever, or more accurately, when we had the greatest level of activity occurring at the ask. And similarly, the delta min was reached when we had the cumulative total during the session for the greatest activity at the bid. And that gave us the delta min. So we know that we have those two parameters for any session, and they give us two extremes, a delta min and a delta max. For Friday, this was the case. My delta max was a positive 7816, and my delta min was minus 18668. Now, the third number is the one I like the most, and I'll tell you why, and that is my delta finish. Well, what is my delta finish? My delta finish is when the candle closed, where was I from the actual min or max? So first of all, when the period closed at 1440, I was at a plus 3748 delta. Immediately that tells me that I was coming up from a minimum delta. Because I ended up with a positive number, then I must have been coming from a negative number. That's why I ended up positive. If I was starting from a max, then I would be having a negative delta. So that's the first thing that tells me that towards the end, as we were getting to the close of the period, I'm finishing positive, meaning I'm coming back up from the delta min. So there was a little bit of increase in activity on the ask side, or we could make the assumption some buyers were stepping in. Now, to get the actual delta for the period, I take my delta min, which was the lowest level I was at when we finished, and I add to it this delta finish, and that gives me the actual delta for the bar. That's how I arrive at my delta. I could also arrive at this delta, the same exact number, simply by subtracting the buy and the sell volume. But I like this method because it really helps me to see where we were at the conclusion of the session. Well, we were really at a extreme negative delta, but we had started to gradually come up from it. And to what extent? What extent did we make a comeback? Actually, this is not to a very large extent. This is only about 20% of the 18,000 negative delta that we had. So our comeback was very modest. So we didn't really close on a very bullish or a very strong buying note. We were still in negative territory, and the delta min was the territory where we were at, and sure enough, the actual delta was at minus 14,920. The reason that this particular analysis is useful and I like it is because it gives me a couple of interesting perspectives. First of all, it tells me where I finished, on what note. Did I reach my delta max first or did I reach my delta min first? In this case, we reached the delta max first, and then towards the end, we were at the delta min. So ultimately, what it's telling me is the sellers did overcome the buyers. There were buyers in the beginning, but those buyers made a battle stand that brought them all the way up to a positive delta of 7,816 at one point in time. But that quickly faded and it dropped all the way down to minus 18,668, and we were just coming back up from that, and we came up to the tune of 3,748, leaving us with an eventual actual delta for the bar of about minus 14,920. So there is still negative pressure in the market, and we haven't gotten to a point where the buyers are making a really strong and powerful comeback yet. But we do see that they're showing their presence and that this is an area that has attracted significant participation, and we got that out of the volume figures. And we saw that the range did not expand significantly to the downside, and as a matter of fact, the range contracted given the intensity of volume that we ended up seeing on Friday. The range actually was a reasonably or a fairly tight range relative to Thursday. The market was not now expanding one way or the other in terms of range. We will be looking at some of these numbers and some of these parameters as parts of our analysis in the future and parts of our strategy. Begin to integrate the bar statistics on your chart, at least to get in the habit of looking at them, and if nothing else, always take a look at total volume figures and compare from one period to the next the changes in volume relative to the range, and that will always give you good insight as to whether a move is contracting and coming to an end, or whether it looks like it is going to continue to flow and has momentum to it. All right, with that, we will conclude our fifth lesson. And as usual, please feel free to forward your questions, and I will get the answers back promptly to you. Best of luck with your trading, and I'll see you in our sixth lesson.